Well, there are mixed opinions in Canada on whether farmers should be compensated based on tariff action on canola by China. Host of Real Ag Radio, Shaun Haney, joins us now with the very latest. Shaun, always good to visit with you. So what decision did the federal government recently make to assist growers?
Yeah, great to be with you here this morning. So remember, China has put significant tariffs on Canadian pork, aquaculture products, field peas, and what's getting the most attention, of course, is canola meal and oil. What the government's done is they've looked at increased loan programming through the advanced payments program. That includes the amount of loan and some of the interest rates that apply to them. Minister Blois, who was basically been the minister for about a week, and now the government's in caretaker mode because of the federal election. But he's proposing changes to agri-stability and trying to push those through at the provincial level. We're going to have more details on that today on Real Ag Radio.
So what other different opinions on the ad hoc programs are you getting?
Yeah, so there's I guess three schools of thought when it comes to maybe having a U.S. style kind of per acre payment to compensate growers. There's the faction that is saying yes, it needs to happen now. The market has dropped, farmers are seeing less value on their balance sheet, and we're heading into 2025 planting. There's a lot of uncertainty, so that's the one camp. There's another camp that says possibly, but maybe this is a little bit premature to do it at this point. Maybe we need to wait and see. One, how long the tariffs are in place, and two, at the end of the day, how does the market respond even if those tariffs do stay in place? We're not certain yet on the concrete losses that farmers have incurred. And then there's another camp that is just flat out, no, there shouldn't be compensation. This isn't something the government should be doing, and there's more efficient ways to support farmers going forward. So that's the way I would sum up the feedback I've got from the audience.
And it's so interesting. It's got to be kind of a complicated issue, especially with the U.S. tariffs and now this. So a lot of factors going into what you guys are dealing with in Canada as far as the farmers are concerned, isn't it?
Yeah, and not to mention also the $9.7 billion that USDA is committed to make sure they get out to farm country across the U.S. Now, of course, there's a cap, I think $125,000 per farmer, but $250,000 per farm unit. A lot of Canadians are looking at that kind of programming where a wheat grower may get, 35 or 40 bucks an acre, and looking at that and saying, well, why aren't we doing that in Canada? And so that's creating some of that compare and contrast at this very moment.
That is so interesting how that factors in, how we do it here in the U.S. and factoring in what's going on there in Canada. Thank you so much for that update. That's host of Real Ag Radio, Shaun Haney. And you can catch Shaun on his show, Real Ag Radio, which airs at 4:30 p.m. Eastern weekdays on Real Radio, Channel 147 on Sirius XM. And we'll visit with him again tomorrow on Market Day Report. And this Real Ag Radio update brought to you by Economics. You can go to nutrient-economics.com for the latest crop nutrition research and information.